coming back to what is the difference between real and financial investment? This also we need to know. Okay. So when it comes to making an investment, this word is a very broad term. We use it for various purposes, or in various contexts we use this word investment. Okay. So let us differentiate actually what is this a real investment and what is the financial investment, right? Now, real investment is investing in tangible assets. Once again, I am telling real investment is investing in tangible assets like land, buildings, machinery, and then office premises. This comes under the real investment. Tangible, which we can touch, which we can feel, which we can experience, right? So that is called as tangible. I bought a house for me. Then we say that it is also an investment. How we can say it as an investment? Because the money which I have invested on my house, it grows in its values in the future days to come. Okay. So I will use the house for my, as long as I live in that house, I use that house after after I cease to exist. So my children now they may sell that house, or else if at all after 10 years of my lifespan, after 20 years of living in that house, if I want to sell. So I bought that house for some 70 lakhs. Now after 10 years, the value of that house will not remain 70 lakhs. It grows in its value. Maybe 1 crore, 2 crores, it may grow in its value. So such type of investment we call it as real investment. What is that? We name it as a real investment. So investment in land and buildings, investment in some fixed assets, maybe some machinery, or maybe in any other tangible assets, we name it as a real investment, right? So usually in many cases what happens is investment in the outside world, when you talk about investment, that investment is a real investment. Okay. Now come back to the second point which is given in this slide. Investing in financial assets like shares, bonds, which is contracts in paper or electronic form. This is called as financial investment. First one is real investment, reinvestment in tangible assets. But investment in bonds, investment in shares, these are intangible, which we cannot touch and which we cannot feel. But it is a contractual agreement between us and with whom we are making an investment. Suppose I am making an investment in the form of deposits with bank. Now bank, what it will do is, it gives a paper in the form of this so and so person who is a son of so and so person. He is making an investment of 5 lakhs for 5 years term period, and I promise to pay him after this 5-year period this much amount at the rate of 6% or 6.25%. So this is a contractual agreement between me and the bank. Okay. So, but I am making an investment, I am not getting in return any physical asset. This is a type of financial investment. We say it is called as a financial asset. Not alone investment in bank deposits, investment in shares of the company, investment in bonds of the company. Now what is this shares? I am talking about shares means here equity shares. Equity shareholders are considered to be the real owners of the company. Whomever invest in the equity shares, they have a ownership right to the extent of the money which they have invested in the shares of the company, right? So equity shareholders, whatever the amount that they have invested, we say it is called as the financial assets to them. So these financial assets are intangible. We only have the contractual agreement paper with us. Will not be having the physical existence, physical assets which is tangible. Now how we can use these particular financial assets? Whenever we want to sell the financial assets, whenever we are in need of money, you can liquidate these financial assets, you can sell these financial assets in the market, and you can encash it. You will get the cash. So such type of assets are called as the financial assets, right? So let us see that. What is that? Shares, equity shares. We have also some other type of shares named as preference shares is there. Equity shares are there, preference shares are. Equity shareholders are the true owners of the company. They have equal rights. Okay, they have the rights, ownership rights. They have the voting rights. They have the right to get dividends on the profits of the company. So those shares are called as equity shares. Preference shares are, the preference will be given to the preference shareholders when compared with the equity shareholders. Preference at the time of liquidation of company, preference on the profits. So, before profits are distributed to the equity shareholders, preference dividend will be made or given at fixed rate of amount to the preference shareholders. So, here those equity shareholders and fixed preference shareholders are called as preference shares are called as financial assets. Now, we have other thing, and you can also differentiate the real assets and financial assets on various grounds. Let us take for example, financial assets are divisible. What is the meaning of divisible? You can divide the financial assets. But let us consider first what is a real asset, and can we divide the real asset? That we will see now. For example, we have a piece of land, 200 square yards of land. Now, when it comes to selling that asset, we have to sell the whole piece of land, 200 square yards. It is undivisible, right? As far as financial assets are concerned, they are divisible. How it is divisible? For example, we have invested in 100 shares of Reliance Industries. Now, if you want some amount of cash, some urgency is there for us, so that we need some amount of cash. Now, what we can do? Half the shares we can sell in the market and can encash that shares. That is the meaning of divisibility. As far as the piece of land of 200 square yards is concerned, you can't sell half the land, you can't sell 1/4 of the land, you can't sell 1/10 piece of the land. So, real assets are not divisible, whereas the financial assets are divisible. Now, marketable, this is other thing. Now, the financial assets, when you talk about the financial assets, these financial assets like shares, bonds, we have a secondary market for this particular financial assets. Shares we can sell in this share market. There is a secondary market called for shares. We call it as a stock market. In layman language, we usually call it as a stock market. So, you can sell the shares in the stock market. You can sell one share, you can sell two shares, and as you sell the shares in T plus 1 days, you can encash the value of the shares which you have sold. And the same is case with the bonds also. You can sell one bond, two bonds, three bonds, whatever the bonds that we have, you can sell in the secondary market and easily you can get encash. That's called as marketability. Whereas when you talk about the land is concerned, the token value of the land is very, very high. Usually it goes in lakhs. In some cases, it goes in crores also if the value of your property is in prime location. Now, that property is not easily marketable. That when compared with the financial assets, the value of the property is not easily marketable. So, this is what you need to understand. Intention of holding the financial assets is for a very short period. In fact, so the main objective of investing in the real assets is we want to hold it for a quite long time so that its value grows over the years. Its values becomes double, 3 times, 4 times, and ultimately you get benefited after so long years by selling the property in the market for a high value. That is the real reason behind investing in real assets. Whereas as far as the financial assets is concerned, what is the objective behind for you to invest in financial assets? We want to make some quick money. Maybe you hold the shares for 1, 2, 3, 4 years or maximum of 4 years, 5 years and want to see that the value of the shares grows and thereby your money, what you have invested, tripled or becomes 3 times, 4 times, 5 times. So, here when compared with the real investment, financial assets are invested for a quite short period of time, but not for a longer period of time. This is how you can distinguish the real assets and the financial assets. So, once again, real assets are investment. When you make an investment in tangible assets, we say it is called as real investment. When you invest in financial assets, so which are basically a contract between you and the people with whom you make an investment, we say it is called as financial assets. Best example is investment in shares, investment in bonds. And how you can differentiate the financial assets and real assets is, this is how you can differentiate. Financial assets are divisible, financial assets are marketable easily when compared with real assets, and the intention of holding the financial assets is for a quite short time when compared with the real assets, which is for a longer period of time. So this is the reason, this is how you can differentiate between real investment and financial investment. Why this slide? The importance of this giving the slide is, usually in many cases when you talk about or when you use the word investment, we usually use this word by keeping the real investment in mind. Okay. Whereas there is a difference between real investment and financial investment, and this is how you can differentiate the two types of investments.